Hey everyone, Craig Gordon, Vice President of Prevail, and I'm joined by our President, Andrew Stafford.
Good to be here.
Andrew, there's been a lot going on in the market this year.
It's been crazy.
It's been crazy. It's been an interesting time to manage money. And as we're kind of approaching the end of earnings, session season here, I think there's a lot of uncertainty and kind of trying to figure out where's the economy going. And really, as money managers and our investment advisor committee, I think we've done some really incredible things. And maybe just kind of talk a little bit to our listeners on where you're seeing the market moving. Where do you see the general economy? What are some of the concerns? And more importantly, what are we doing to address that here at Prevail?
Yeah, I think earnings season was really interesting, Craig, as you think about it. So somewhere around 85% of all the companies in the S&P beat earnings estimates.
Yeah, isn't that crazy?
So if you were to go out and just casually ask a person on the street, how are they feeling? How do they think the economy's doing? I don't know what the answer would be, but I don't think we would get the actual response that 84% of companies beat estimates. Now, coming off the tariff scare, coming off Q1, a lot of people changed guidance. A lot of people pulled guidance back, right? So, they handicapped it a little bit, but still companies perform pretty well. Here's what I think is really impactful. When you look at it, 58% of the companies in the S&P 500 raised their full year guidance for the year. So not only did we have a big beat, but we had a strong raise as we look at companies' forward outlook. Now, I still think there's a little bit of tariff, hangover. What is the impact as it comes through the supply chain? What does that look like? Here's the thing that I think is really impactful. August and September, we know historically are pretty volatile months.
That's right.
Tech was the largest drawdown in the market back when you look at April, but it brought the markets back.
Right.
And as an IAC, we feel tech got a little frothy, right?
Yeah.
And so we still love tech. We still think tech's going to be strong. But if we're going to experience some volatility, we took a little risk off the table. And we've raised some levels of cash to be able to be opportunistic as we go into the next couple months. I still feel pretty good about the year. I think most people do, barring some major geopolitical event, which we're starting to eliminate a lot of those, right?
Yeah.
When you look at it, a lot of things are starting to get answered that were causing uncertainty in the markets. So I think the one that's left is interest rates.
It's interest rates and the conversations here and what's the Fed going to do?
Yeah. So I think our active trading, the way that we approach the market, the way we move risk on and move risk off has been really impactful.
Yeah. And I think we're well positioned, candidly, for whatever direction the Fed does, or from their timing, I should say, of when the Fed makes those decisions. And so I'm excited about that outlook.
I think we need to get through the next 45 days, 45, 60 days. And generally, historically, the last part of the year can be pretty good. And the economy overall is doing pretty well. So I give a lot of credit to our team. They've done really, really good work.
Likewise here. Well, if you'd like to learn more, check us out below at prevailiws.com.